what we're going to go over today is all the indicators, strategies, and everything that we have in the Discord. Go over it in detail, so if some things are unclear, we'll clear them out. And then later on, we can look at a couple trades, and we can also look at statistics, really. And now, as we're building the prop firms and prop challenges, I have been working a lot with simulations and looking at trader performances and analyzing traders, because that is something like, as we're building this Discord and as we're talking about strategies, giving you guys strategies and indicators, so on. The beautiful part, that my favorite part about it, is that you guys take it and while you still apply it as close as possible to the rules, over time you're able to deviate slightly and adjust the strategies towards your style, which then creates which then finds new ways to trade that strategy, which is something that I couldn't do myself, right? Because I have one trading style, whereas when we put it to multiple people, they have multiple trading styles. The one thing that's important, though, is that the mindset of those people, which means you guys, is correct. Focusing on consistency, focusing on long-term thinking, and focusing on risk management, mindset, strategy, all of those things, right? The three pillars. So as long as that's the case, then it will be a community growing strategy, and strategies multiple, which is very, very good. And then we also have an evaluation method now with the challenges. So whatever passes the challenges, I thought about it, and what we'll do is that whoever passes a challenge will automate that strategy for free, because clearly that's a good strategy, right? And it will make sense to trade that, and as it has good performance on live data, then we can just add in more money, because our liquidity is close to unlimited at this point. So yeah, I think that that's going to be beneficial for everyone. Okay, so let's start with Porcupine. Well, actually, we'll start with the stock strat, then we'll go over Porcupine, then we'll go over the scalper, and then we'll go over the dashboard. So first of all, what I'm going to do is I will disable Porcupine, I'll disable the scalpers, and we'll just look at the naked stock strategy. All right, so and this is basically the main strategy that everything else is based off of, right? So it's important to understand this one, and then we can go off of that. So in its very, very core, what the strategy is a trend reversal strategy, meaning that it excels and it works really, really well when we're trading ranges, right? And I have a couple markers here, which I can remove for you guys too, so it doesn't look like a Christmas tree. But essentially, the markers that I have are here to mark ranges, right? So we had a range here, right, where we traded up, down, up, down, up, down. Then we had another range here where we traded up, down, up, down, up, down. And then we had another range right here, which is the previous range, by the way. We're bouncing up and down, and now we're somewhere in the middle, bouncing around with this level. So this is the environment that is great for our strategy. And there's millions of strategies, and we'll go over the dashboards where there's like dozens of strategies that we can pick and choose from, which, by the way, the signals are live as well. So the Telegram signals, whoever has Shark and above, you'll have the Telegram signals as well. They will send out notifications when the strategies enter and exit. And if you want to talk automation, we can talk about that later as well. So okay, so here we go. We have our trend following strategy, and what does that mean? Trend reversal, sorry. What does that mean? Well, that means that we're trading range bounces, right? And as default in the market, when you have a range, then the probability of bouncing around is pretty high. Obviously, the more you bounce around, then eventually, the chance happens that you break through that range, which is expected. But just trading that range and catching the range as early as possible and then trading it means that you have, by default, you have a pretty high hit rate. So you're going to be right more often than not, which is great, right? Now we just need to adjust it in a way where we manage the trades and manage our risk accordingly. So when we're not right, we don't blow our account, or we don't blow the profits that we made, and we maximize the profits within the range, right? For contrast, another strategy is a trend reversal, trend following strategy, which means that we're trading breakouts. So whenever the trend reversal strategy doesn't work, and we don't bounce off, but we break through that level, that's where the trend following strategy makes money. And that strategy is not right most of the time, right? It has a much lower hit rate. Most of the time it's wrong, but the losses are pretty small and the wins are pretty high. Like here, for example, because the move is usually pretty big. So that's a different strategy, and that's just for reference that there's different options on doing that. But the stock strategy is a trend reversal strategy, meaning that we're trading trend reversals, and by default our hit rate is pretty high, which is good. And also what is very, very good with the strategy, and these are just natural advantages that we have because of how the market works and the strategy that we're trading. So another great thing is that when we trade the strategy, we're trading tops and bottoms of ranges, meaning that our trade invalidation, our stop loss is pretty tight usually. And on top of that, we can also pretty easily anticipate the levels where we bounce off of. So we can, by anticipating, we can add in layers before the price even gets there, which will make sure that we get the best price we possibly can in that move. If you want to know more about that, there's a bunch of videos on YouTube that talk specifically about this for hours. So I'm not going to go too much into detail. I'm going to go over the strategy, but just a little bit of a background so you know what's going on and what strategy we're trading. So we're trading trend reversals, right? Bounces, and we don't just trade price action. In fact, we don't look at price action all that much. What we're trading is the stochastic. And we're not just trading the stochastic on one time frame. That would not be enough. The stochastic is a nice oscillator, right? It's solid. And you will see tops and bottoms of ranges where there are tops and bottoms in the stochastic. However, it's not general enough and it's not precise enough, at least not on one time frame. So if you would just trade one time frame, one stochastic, you would not be profitable overall because it's just not enough. There's just too much movement and the stochastic does not catch up with it. However, what we have found is that we look at multiple confirmations where it's much easier to find the truth in the market, right? So I'm looking for an easy analogy, right? But essentially, when you're in a dark room with a blindfold on, so you can't see anything, right? That's basically us in the market trying to figure out what's going to happen in the future. And let's assume that you're allowed to touch one thing one time, right? So you can touch the wall or you can touch the table, but it's only one single touch, right? So there's a table or something, right? But you don't know anything else about the entire room. And rest assured, if you would just start walking, you'd probably hit your face against something. However, if you were able to touch something 100 times, right? So you can touch around, you can touch all the walls, you can touch all the think about it. If you were in a dark room and you don't see anything, how would you move forward, right? You'd put your hands in front and try to grab things. And as you grab things, you slide your hand, step by step across the table, across the wall, to have something to hold on to and to, move forward, right? So how many touch points are there? A lot, 50, 100 or something like that. So you get from A to B. And this is very similar in trading, right? And one stochastic or one indicator is one touch point. So obviously we want as many touch points as possible because that will make it easier for us to see where the market's really at. And the beautiful part about the stochastic, so what's good about the strategy, right, is that it has been designed with the core market principles in mind. So what I just said, right, how a trend works, how a range works, the fact that you want multiple touches and multiple perspectives, all of that was in mind when we were creating the strategy. Meaning that by default, just by the strategy existing and how the stochastics work, we will check a lot of those boxes without doing anything, right? So we're positioning ourselves pretty well before even doing any work. And that's really important in trading. So we're not just doing one touch, right? The beautiful part is that we can look at multiple time frames. And as we look at multiple time frames, what happens is that the stochastic works with other data. It's the same chart, but it's other data, right? Because it's different candles. So because we look at other data and we have a lot of time frames, like right here, you see I have a lot of time frames open. We, by the way, use all of them. We got the 1 minute, 3, 5, 15, 30, 1 hour, 2 hour, 3 hour, 4 hour, 6 hour, 8 hour, 12 hour, daily, weekly, and monthly, right? So that's a lot of time frames, and every single one of them has a stochastic value. Now, if you look at all those stochastic values, then you will get a much better idea about where the market is, short term and long term. And by combining those together and comparing those, you will see where the strength really is. So let's say that the high time frames are very bearish, right? But the low time frames are very bullish. What does that mean? Well, that means that overall we're bearish, yeah, but short term there might be some sort of pump or some sort of retracement to the upside before there is a continuation down. Now we keep observing the market, and what we see is the stochastics went from bottom all the way up on the lower time frames. On the higher time frames they're still going down. So now we're primed for a big move across all time frames, right? So at this point, the lower time frames, they're topped out, but the higher time frames are topped out as well, going down, meaning that the move on the lower time frames is expected to be much larger. And that's the beauty of the strategy. So just the naked strategy, how we trade it, is wherever we have a range, right? We trade. When we day trade this, we look at the higher time frames for a bias. Okay, where does the strategy, where does the market, where is it tending to go to, right? We want them to be aligned, and then we look at the lower time frames, and we see, okay, random point here, for example. Okay, so the 30-minute is topped out here, right? So the 30 minutes stochastic is pretty high. Let's see what the higher time frames are doing here. So on the higher time frames, our 1 hour was still going down. Our 2 hour was probably doing something similar here, topped out going down. So you see that these ones are rather topped out going down. If I go to the 4 hour, for example, that one's topped out too. And you see what happened later on, right? There was this big move, but on the smaller time frames, the 30 minute was topped out, and by the way, there was a big move, but it took a while. Oh, sorry, that's the wrong line right here. The 30 minute was topped out. Let me just catch myself right here. So the 30 minute was topped out, and there was a move, right? But it wasn't the big move yet, right? So the 30 minutes topped out. Let's look at the lower time frames, and also I'll just do the replay here, so it's going to be easier for us to look at the chart. I don't have to scroll down every single time. So the 30 minutes topped out. Let's go to the lower time frames. The 15 minute topped out as well. The 5 minute topped out as well. The 3 minute is topped out as well. The 1 minute is going to be topped out as well. If we go to the 4 hour, for example, the 4 hour is bottoming out, right, or going up, right? So we probably won't expect as big of a move as before, because our lower time frames, they're just somehow choppy. However, on the higher time frames, the lower time frames are still aligned going down, right? So really, what we're looking at is how many time frames are aligned, and depending on what we trade, if we swing trade, we look at higher time frames. If we day trade, we look at lower time frames. And we definitely want our 3, 5, 15, 30 minute time frames aligned for a day trade. And if we're looking at bigger trades, then we got to make sure that the higher time frames are aligned for a big move, and then the lower time frames can catch up and have a full alignment before we have a big move. So there's two ways of trading it. I have a friend that trades it on the higher time frames only, and it's working really, really well for him. He's trading with larger account sizes, so it's much, much easier for him. Because on a 4, 6, 8 hour, very, very similar to our dashboards. All right, so if you trade with a couple $1 million, it's no problem to trade that because there's a long time to enter on a 4-hour candle or 6-hour candle, rather than when you trade the 3 and 5 minute. Entering with $5-6 million is going to be a problem. The liquidity isn't really going to be there, so that's why it's beneficial to trade larger time frames as well. But for now, we're trading the lower time frames, and our strategy is: do we have our 3, 5, 15, and 30 aligned? Aligned means position-wise topped out, or already going down. And if that's the case, then we can expect a larger move down. And what happened here, for example, on the 30-minute, I can just move it forward. Yeah, we had some kind of movement down, right? And this is something that you can backtest a lot, and you will see that this works in general relatively well. So that's our stock strategy, right? And this is a simple strategy, but it takes a little bit of practice in order to get it to work. Now, if you want to know exactly how you should practice a strategy, so when you're live trading, you are much more likely to be successful with it, is with the video that we did a couple days ago, with the 7 steps on how to implement a strategy, learn it, and then test it, and then trade it, right? So that's a stock strategy. And obviously in the Discord, whenever you have questions, we'll go much more into detail about it. So as we're trading multiple time frames, right, it is time consuming and energy consuming. You need to remember a lot of information on a lot of time frames in order to be able to form your bias on the market. And that's really why the strategy shines, why it's so profitable, is because you are creating a bias for the overall market. And that takes a little bit of practice, because you need to, your brain needs to get used to, saving that much information. So what we did for beginners was that, okay, well, we can take a part of this work and, consolidate it and have a bot do it, right? So, and that's how we created the Porcupine. So the Porcupine indicator, how it works is that these levels that you have here is a combined score of the 30-minute and below. So we can see that with the when you look at the waves or the oscillations of these bars, they are pretty similar to the 30-minute, right? And as you look a little bit closer, you will see that whenever we hit these thresholds, it means that all the time frames are either topped or bottomed out. So now we don't have to go through every single one of those time frames. We have it within one indicator. The best way to look at this is to go to the 15-minute, because that's a good level of granularity. And there, depending on the coin, we have different thresholds that we want to hit because of the overall behavior of the trade. But really what this is it shows us 30-minute and below what the overall score of the stochastics is. And what is a good trade? A good trade is when the overall score is high and reaching a threshold and then starts going down. Because what does that mean? That means that the overall market bias has topped out and now the direction is starting to go down. And we see that by this line. So this tracing line that's sometimes green or sometimes red, that's the direction of these bars. So you see that it's green, and then this red line that ends up over here means that the bars are starting to go down. And that's usually the good trigger when you want to trade and when you want to trade this. And this happens also, overall, you want to make sure that the bias on the higher time frames is correct. But the best way to utilize this is by seeing, okay, so we just hit a threshold here, right? And as we hit this threshold and we're starting to go down, that's a good time to enter. And you can confirm it on different time frames. So for example, on this line, right? Let me hit the replay again just to make sure. So I don't have to, I'd have to scroll around all that much. Let me make sure that you guys see everything. All right, let me know, guys, if it's visible, right? If you guys can see what's going on. Might be still a little bit choppy here, but yeah. All right, so let me try and load this thing, or not. Probably just reload this, but let's just go to a different situation. Okay, here we go. So so at this point, right, the score is high here. What does that mean? Well, the 15 minutes topped out, right? If we go to a 30 minute, the 30 minutes topped out, right? The 30 minutes topped out. The 5 minute is going to be topped out as well. And, you know, this is the thing, right? You don't have to go through every single time frame here. You just have to you just have to score all together. And now if you go, the lower you go, the more granular the score is going to be, and that's something that you can test around with. Usually I look at the 15 or 5 minute. I like the 5 minute to look at, you know, most of the day trading stuff, while obviously we'll look at these data as well, but it's going to be more granular. And if you go lower, then it might be too granular. So usually I like to look at the 5 and 15 minutes. Here in this case, you see that we hit the threshold and start going down. So the thing is here that this blue line that you see is a bot signaling a short. And what this is it looks at if we hit the threshold. And as we hit the threshold and the bars start going down, which is signaled by this red line here, we trigger a short. And that's basically how it works. Now, when you go into the Porcupine and go into the settings, you can adjust this threshold. And the reason you can adjust this threshold is because you need different strengths of indicators for different coins, whether that's Bitcoin or crypto or Forex. And we have that list of indicators in the, everyone that has the indicator has the optimal settings for every single coin. Which on Bitcoin, I believe that's a 2.5, something like that. So this is how the Porcupine indicator works. It looks at the overall scores or overall, you know, places and directions of the stochastics and sum them up together into one single score. And the beauty of this is that even if we have, you know, like here, for example, right, the 5 minute bottomed out. And you might think like, okay, this might be an alignment over everything and the price might move up a lot. But if you look at the score, the other time frames are not really in alignment. Because the 5 minutes down, but the score, you know, is very, very far from being bottomed out. And this is how how this indicator is being used. So you use this to consolidate the stochastics on lower time frames. And as you do that, you're able to, you know, catch trades and, you know, catch movements that that would be, you know, hard to look at if you would have to go through every single one of those time frames. So if you're implementing this in a strategy, then rather than having to go through every single time frame, you just have the overall score, which tells you the same exact thing. You can still look at more detail into those time frames, but, you know, just trading the indicator by itself with risk management and the correct mindset will be profitable, because I did it. So you need to be aware of, you know, what's going on in the market and what the higher time frames are doing, because those are excluded from this indicator, right? This is just an oscillation and consolidation of these lower time frames. So that's the Porcupine indicator. Now the next thing that we have is the overlays. So let me just turn off, or actually I'll leave the indicator here. I'll just make it a bit smaller. I don't want this to get too messy, and it very, very quickly can. So the overlays I don't have on very often because I have the signals here. That's a topping and bottoming, which go into Porcupine, which, you know, if you're there, I'm sure you know about them because they happen a lot. And the way I'm using this is an overall market bias. I will tell you how. So if I would turn on the overlays, what this shows us is the alignments of the stochastics up to the 1 hour and the strength of it. So the more red the color, the more of a bearish alignment we have, and the more green the color, the more of a bullish alignment we have. And this is, number one, good to look at if we look at the market bias when we're trying to trade this, right? So you can align this with, I want, you know, some sort of bearish bias together with the Porcupine indicator, which by itself gives you, you know, 5 confirmations, because you're looking like 5 different perspectives of the stochastics, plus you have 5 other confirmations in these alignments, so 10 confirmations in total. And if those align together, then once again you have a much higher chance that this works, that the probability of the trade to succeed is much, much higher, because you're looking at multiple angles and multiple perspectives and see the same thing in the market. So that's as if in a corporation, right? You have a board, and the board has votes, and for big decisions in the company, the board needs to vote unanimously, or the larger or over 50%, depends on the board, but really it's a vote, right, of different perspectives and different opinions. And once the board aligns, then that is being taken. Same as in the legal system, right? You have a jury, and that jury needs to vote, and depending on 12 different opinions, if 12 different opinions agree on the same thing, that the chance that that one thing works or is true is much, much higher. And this system is used, in many, many cases because it's just effective and it works. So we're using the same exact thing, right? You can think of one stochastic or, any indicator that you have as one juror, right? One person in the board, one board member. And the more you have, if they all agree, the higher the chance that what they agree on is true. What is important, though, is that there are different perspectives. If 12 people look at the same exact thing from the same angle, or hear the same exact story, then there might be some deviation, but in general, they will probably be pretty aligned already. However, if you have 12 people looking at one thing from 12 different angles, standing all around it, then they might have different opinions on what it is, right? Because the trick is that they're looking at different perspectives. So different people can tell you things that you don't know, which is the same thing here. We have one stochastic, and that one stochastic is looking at the market through one angle, one time frame, right? One dimension, and which is great. And it's giving us the data or the report from the data as it is designed to do. However, this indicator cannot see what's going on in the larger picture because it just doesn't have the data to do so. And same thing on a 6-hour time frame. That indicator cannot tell us what's going on the lower time frames because it's just not granular enough. So by combining the reports of all the different perspectives, we have larger alignments, and the trades that we trade have a higher probability to work. Very simple. Same thing a jury does, same thing a board does. Same thing. So we're trying to get as many confirmations as possible. Now, obviously, you can, extrapolate it and be like, okay, well, I want 100 confirmations, and otherwise, I'm not going to do that. Chances are, if you go too far, then they will never align 100%, or they will align like once a year, right? So it's a good. It's important to find a good mix of confirmation and alignments where they're still very viable, those alignments, but they also happen relatively often. So here's the beauty of it, right? We just talked about stochastics, right? And different time frames are different perspectives on the stochastics. Then we added on the porcupine, and actually the porcupine has slightly different data on different time frames. So we can use those as confirmations as well, on lower time frames and on higher time frames. Then we added in the overlays, which, once again, the lower you go, the more granular they're going to be, right? For example, right here, we have a high green color, meaning that there's a lot of alignment going on with the porcupine going very low as well. So there might be, short term, a very nice bounce here on Bitcoin. If we go on the 1 hour though, you will not see that overlay because that data is not granular enough. Okay, we see it on the 1 hour already, so maybe we see it everywhere. Let's see. Yeah, so on the 6 hour, we just about saw it. So this is strong enough to see everywhere with the overlays because they look at different time frames already. But if we were granular enough, then this overlay can stop while we still see it on the higher time frame. So there's different perspectives, right? And that's the overlay. Now, what's another dimension to look at? And you might see where I'm going with this. So this is on Bitcoin, right? So how about we map the overlays and the indicators on a bunch of other coins? And that's what we have here. These are all signals that are set up for other coins. So when are my favorite trades to trade? When Porcupine, some of you, or probably every single one of you, might be annoyed by the amount of signals that come in like this into the Porcupine group, and you've most likely muted it already. However, when we see a large inflow of these signals, it means that a lot of coins in the crypto market are saying the same thing, plus Bitcoin is saying the same thing, plus Porcupine is saying the same thing, plus the stochastics are saying the same thing. And as they do, we actually have a lot of perspectives here that are aligning. So what does this mean? The chance of a move, according to all of these perspectives, if they're aligned, is pretty high. And that's the idea of it, right? We're taking a core market principle that works, which is trend reversals and ranges, and then we're looking at confirmations of those by using stochastics, and then we try to find as many perspectives as possible on different coins as well. Well, first of all, as many perspectives as possible, consolidate them and look at overlays, look at the Porcupine, and then we look at other coins as well to get even more confirmations. And once those all align, then we have a pretty consistent move in the market. And anyone that has these indicators, I would highly encourage you to backtest this and look at the overlays, look at Porcupine, what they did on Bitcoin, and then open a bunch of other tabs with other coins and see how the alignments, how the overlays, what Porcupine said during that time as well, and see how, if multiple coins agree, if that move actually happens and how well it happens, right? So and the preferred way of trading this is getting the bias off of Bitcoin, but then jumping over to other coins to trade them, because those usually have bigger moves. So if I have an alignment everywhere, right, and Bitcoin here say, assuming it will go to the top of the range, is 2%, right? But, I'm just guessing right now. We could go to Chiliz here, and Chiliz to the top of the range would be 4% or 5%. So, that's double the move on the same thing. So that's when I like to go to lower time frames here in order to make sure that we have better moves or better value for the time that we put in. And this is how I trade, these daily trades. Is I look at confirmations. I want to make sure that they're all together, they're all aligning, and as they are aligning, I look at Bitcoin, see the overall bias, make sure that it's accurate and consistent, and then I look at better setups, right? So once that analysis is done, I actually look at the stochastic and see, okay, how low are they? What is the direction of each of them? And based on that, I will find the best setup in the list of coins that I have here, and I will trade the best 3 setups or something like that. Once again, distributing. And when you do that, over 1,000 trades, then the chance that you're setting yourself up for success, because you're distributing so much. Your probability is right, the strategy is right? You might not know, but I can tell you because I've traded it for years. So it is valid. So what you do now is you make sure that you have as many horses in a race as possible, right? So basically what you do is you increase the sample size to take luck or, misfortune in this case, out of the equation. And if your overall numbers make sense, then your overall numbers will be profitable. That's what it is. And there's also something very important to remember for the challenges. So these are the porcupine indicators. These are the porcupine strategies, right? So that's that. Now, what we built on top of that is the scalper. What is the scalper? The scalper essentially trades the same thing, alignments. It's specifically made to trade on Bitcoin, and it is designed to trade as many trades as possible in a day in order to have the biggest effect with compounding. For reference, the dashboards, right, they might trade once or twice a week, which is good because they're, much larger time frame trades, and they're very, very consistent. And over years, they have still been consistent, which is good for low risk account management. As we go into day trading and scalping, obviously there's more volatility, but the advantage of that is that you can essentially reinvest your profits 20 times a day. So when you look at compounding, and we went over compounding a lot, those are insane results. So you can build an account very, very quickly, and that's why it's very, very enticing for people that want to build up accounts, and that's why we built it, because there's many people in the Discord that would like to build up accounts. And I'd rather, have a way of doing that, in a consistent basis. It's still higher risk, right? But it's much better than, trying to guess and blowing your account one way or another. This way, you make sure that at least the way you do it has some form. And, overall, we can just look at the scalper. Overall, the scalper is looking really good, right? So this is over the past 2 months or something like that. If I draw this, if I turn on the deep back testing, if it ever loads, it would be at 200 grand or something like that. So, pretty solid. So the point of how the scalper works is it has entries and exits, and it can run automatically, yes. The way I like to run it right now, there are, options where I can trade, if it were to trade automatically, you'd be fine. However, you can increase the profitability and the efficiency of these trades by multiple hundreds of % by managing it manually and making sure that you take profits accordingly and you look at the overall market bias in order to trade it. And these signals are in 170 grand. And these signals, there are in the porcupine signals. Again, I can separate them into a separate channel, because these topping and bottoming obviously spam it quite a bit. So I think that I will sort this out for you guys. But essentially it will send messages when it enters and exits. Now we'll also have a an auto trading situation that's being built right now, and it will be done within a couple of days. There's a couple more things that we do because we're taking the strategy and we're putting it into our system, into our backtesting, so it's actually valid. Here the performance is actually much lower than it should be because of the inefficiencies. So there's a lot of trades where sometimes the stop loss just doesn't trigger here. So obviously it does when you're manually trading it, but like when you look at the backtest, then it just shows a stop loss where there clearly wouldn't be a stop loss, and or vice versa. And number one, and then number two, it exits pretty early sometimes, and it trades during times where we wouldn't trade at all. So those are inefficiencies that are very, very easy to fix when you're manually trading it, right? And essentially the way it works is, again, it's looking at overlays on lower time frames, and as it's looking at overlays on the lower time frames, it calculates the probability of the trade working, and based on that it trades, and it exits based on stochastics overall, the score topping and bottoming out on very low time frames. So as we're trading this manually, we can let it take profits much more. However, we need to keep it tight, just because of this trading backtesting, which is very, very inefficient. So the backtest, once we have it internally in our system, will be a more accurate backtest, and it's going to look much better too. Which I'm not saying it's not looking good, but yeah. So and this I have been trading like a couple days ago. I took like 3 or 4 days where I've just been trading like 10-20 trades a day, and just to get a feel for it, see how it works, and it has been working really, really well. Like every single one of those days was very profitable. So yeah, and then also what we can do here is flips, but really that's the scalper, right? That's how the scalper works. It has we're still securing the source code, but really it has entries and exits, and based on that we just trade it. And this is something great to have running or trading manually when you're building up your account, because you have a lot of horses in the race, because there's so many trades. So if you know your statistics and you know that over time you will be profitable, then it's not really over time, it's over a certain number of trades or over a certain volume traded. So what that means is that you want to get that as quick as possible, or you want as many trades as possible, so even out the odds. As an example, right, if you have a coin flip, I mean, we all know that a coin flip is 50-50, right? Or, let's just assume it's clear 50-50. So if you flip your coin 100 times, then you might still get like 60% heads, right? Just because of randomness. However, if you flip it 1,000,000 times, then you'll get much closer to 50%, right? Because you're increasing the sample size, you have more horses in the race, so to speak, and you take luck out of the equation. So the actual probability has a much higher chance of getting there because you're doing more iterations. And that's what the scalper is based off. It's taking the strategy, the stock strategy, and putting it into a version where it can trade as often as possible per day, which then, increases sample size, takes luck out of the equation, and also lets you compound, in an intraday basis, which is huge for compounding. So this as a product, in order to growing accounts, is like that's specifically what it's made for, right? All right, so we went over the stock strategy, we went over Porcupine, we went over the scalper, we went over the overlays. Now the next thing that we have are our dashboards. So let me just jump in here, and I will actually open both. Let me go ahead here and log into the strategy and the bundles. 1, 2. All right, so here we go. So these dashboards and these strategies are essentially the first full project that we built in our hedge fund. And since then, we just started to develop it further and further. And then eventually, when the performance was good enough, we stopped developing it, and it has just been running ever since. So at around April this year, 2023, was when we, since then, we didn't touch it at all. And any performance that you see afterwards is just performance that has been done in full automation. Before that as well, but there might have been slight optimizations. But since April 23, there has been nothing touched in the actual performance of these strategies. So let me go here. So the way this works, why do we have two dashboards? We have bundles and we have the strategies. Why do we have two dashboards? Well, how this works is that we have found, or we have developed many strategies in when we were trading, right? And that took a while and was a lot of effort, right? It wasn't that easy to build a strategy that is generally working over a period of years, testing that on different coins, different years, different sample data, and them all coming back positive is an incredible hard thing to do. And it was not easy. It took us a long time to figure it out. The thing that when it really clicked for us was when we sat down and we're like, okay, this, kind of works, but, not good enough. We need to figure something out. And we went through every single trade. Me and Alex went through every single trade and figured out what in its core, why the strategy works, why it doesn't work, when it works, when it doesn't work, and then understood, the mechanics that it's using. And based on that, we were then able to optimize the strategy, and we were then able to create new strategies that were then profitable over a long period of time. And with profitable, I don't mean like, I look 1 week back and it's profitable. With that, I mean, I tested on, decades of data and the results are consistent. Because that's something that our investors wanted. That is exactly what our investors wanted. It was not easy to do. So this, for example, this is a Doge strategy. And, for lack of creativity, it's called Doge Strat. But then you have some amazing names there as well. You can thank Alex for those names. I'm still not, some of them haunt me at night still. But, you can take it up with them. I can go here, for example, to ETH Turtle. That's still an okay name. If you go on Solana and FTM, I don't even want to say those names out loud because I'm embarrassed. But, you might like those names. So we have different strategies here. So what are these bundles? When you look at a bundle, right, say this bundle 4, this is our most profitable bundle. It has been a very, very straight line, and then eventually, started blowing up. That's just because we have we had some runs on Solana and Phantom, like Solana's up, I don't know how many 100% on the year. So that's what you see reflected here. But in general, they're very consistent, very consistent line. So as you can see, there's a lot of strategies here. What does this mean? Well, what this means is that we have analyzed the strategies that we have, and we have seen when they work and when they don't work, right? Simple example, trend following and trend reversal strategies. What does that mean? Trend reversal works when the price bounces. Trend following works when the price doesn't bounce but breaks out. So they're working, they're negatively correlated. They're working in opposite, right? Both of them are profitable, but what happens when you add them together and trade both of them at the same time? Your consistency is much better because, when one has a losing day, the other one has a winning day. So you basically average it out to a straight line. So we're like, okay, well, that's the case. What other cases do we have? And we came up with a bundle that has 9 strategies. And, they have trend following, they have trend reversal, they have meme coins, and they have altcoins. And that's because of, you might be in an alt season, you might not be in an alt season, and things like that. And these are, for example, these are times where you were in an alt season, or at least the altcoins were very profitable. We have altcoins or strategies on altcoins that are trend following. We have strategies on altcoins that are trend reversal. As the Doge strat that you saw just before, this is a trend following strategy, ETH Turtle. The Doge strat before was a trend reversal strategy. And they're all bundled together specifically to fill each other's gaps. And they're trading at the same time. And that is why you see the performance being so steady. Because we know exactly what the times are when a strategy does not work, and we fill it with a strategy that does work at exactly that time. And the result is very consistent results. So this bundle dashboard, what it is for, is to see how your overall bundle is doing. Does this mean that you need to trade all 9 strategies? No, you could, because these strategies, they don't trade that often. For example, ETH Turtle, as we go here, profit since 2020, that's when we had our first trade, is 2,200%. And that is, by the way, that's not updated to live data. It would be much higher now. The hit rate is 80%, so that's a good hit rate. The Sharpe ratio is insane. Everything above 3 is very, very high. What we're looking at here now is the average trade duration. So on average, it is in a trade for 10 days. And the number of total trades is 52 over like 2 years, something like that. So it trades every second week. So, some trade more often, some trade less often. But in general, it's very easy to also manually trade these strategies because they don't trade that often. Like 9 strategies here, you might get a signal like every second day, something like that. So, they're very solid to trade, or like every day. Sometimes you have like two signals in a day, things like that. So they're very simple, very straightforward to trade, even though you're trading 9 strategies at the same time. And you don't have to trade 9 strategies at the same time, and that's what this dashboard is for, because you can change the allocations here. What you can do, for example, is like, okay, I see that Solana and Phantom are doing really well, right? I can see, right now Phantom is at 11% and Solana is at 33% and ETH is at 9%. So what I'm going to do is, where Phantom has 5%, I'm just going to increase this to a 25%, and Solana I'm going to increase to 30%. Now obviously my allocation is too high. My entire account has only 100% in it, obviously, so I need to take away some of that allocations. I'll take away from Bitcoin here, take away from ETH. What else can I take away from? I'm just going to take, for simplicity, I'm just going to put this to 10%, so I'm at 100%, and I'll update the allocations. Now from 56 grand, so that's the base, that's the actual trading. Now, as we change the allocations, we would see now what it's doing. It's calculating how the performance, based on live trades, how the performance would be if we had different allocations in those strategies. So it takes a little bit to calculate, because it's actually simulating it trade by trade with slippage, with fees and all of that stuff. So it takes a while. Okay, so we doubled our account. From 56 grand, we went to 100 grand. We didn't double our account, we 10x'd our account, but it's double the performance that we had before. And the reason that is because we put more allocation towards altcoins, which is more of an aggressive approach. Now you might think, why wouldn't everyone do that? Well, some people, mostly conservative investors, they like to have more allocations towards low volatility coins like Bitcoin. So obviously the volatility is lower. Because, for example, a jump here, we went from 80 grand once to 70 grand. So that's a 10 grand dip. That might be something that's too aggressive for a conservative trader. So someone might not want this because they might not start with 10 grand and might start with $10 million, and they don't want to 10x their account. They want, to make $1 million a year and not think about it. So, those are different approaches. So these are the bundles, and these are how you use the bundles. And here as well, you can play around with the leverage. Now, and this is also a beautiful thing to play around with, because you'll see if you put leverage on the overall account, and then in the strategies, you can see if you put the leverage on the separate strategies. So if you put a leverage on the conservative ones, you can actually go with a pretty high leverage here and it will still work. I'm not sure if this wouldn't be broken down if you use the high leverage on the altcoins. Let's just go with a 2x leverage and see what happens. This will load for a little bit still. But really what we want to see is, can we sustain a higher leverage? Because, Solana and Phantom, like those trades, like some of those trades have like 100%, 150%, right? So those are very, very volatile trades. They don't look volatile here because, they're evened out by, all the other strategies, which is the point of them. It's the point of the entire bundle. But putting a leverage across the entire board of the strategies is something that's very, very aggressive. A much better approach is to actually take that and look at the leverage and the strategies separately. Okay, so right now we're at 160 grand. So we 3x'd the performance. So right now we're at 16x of the overall account, which is good. However, the dip was 10 grand before, right? From 80 to 70 grand. Now the dip is from 130 to 93. So that's $40,000. That's 4 times your initial investment here. Obviously, the initial investment, went up like 13x at this point. So, but still, this is a big dip. And this is something unacceptable for many investors. For other people, it might be something that's okay. So that's why leverage is an option here, and that's why it's important to understand and play around with it before you start trading these dashboards. So now, if we want to learn what the strategies are doing, let's look at FTM, right? Let's just look at it. Go to FTM. Actually, let's look at Solana because that's the driving one. Let's look at Solana, updated. This once again is going to load the balance and calculate everything if we change something here, and it will give us the results. So a starting balance of 10 grand is 190 grand, right? So you would say, okay, well that's much better than the entire bundle. Why don't I just do that? Well, trading one coin, what if Solana was Luna? I don't know if you guys know what Luna is. It is a coin that did really, really well, very close to Solana actually, behavior-wise. And also, what's interesting is the name, now that I think about it. Luna and Solana. Something to think about. But Luna went from, I don't know, like $2 or something like that to $100. And it was the third largest coin market cap-wise, I think, at its peak. And then within 2 days it went to 0. How could you anticipate it? Some people say they could have, who knows. But that's an option. That's crypto. That's why we distribute. So that's why we make sure that our bundles are consisting of many, many coins, and we take profits with the correct risk management. And as a result, we survive through doomsday scenarios and, scenarios like this because of it. As a matter of fact, we were shorting Luna at that point, and we made a lot of money through it. But, for the example's sake, that's why it's important to distribute. That's why it's important. That's why these dashboards have been increasing in value constantly, because they're designed to account for these things. And that was the hard part to do. That was the hardest part to do here. So this Solana, right? And it has great trades here. The largest trade on spot without leverage was 136%. So obviously it's good. We have some descriptions about it. What this does really is, it's trend following strategy on Solana. It's based on a 12-hour time frame, so very high time frame. On average, we're in the trade for 6 days. We have a very solid Sharpe ratio, but a very low win rate. Why do we have a low win rate? Well, we have a very low stop loss, and the way the strategy works is that, as you can see, the win rate is much better now than it was when we did these statistics, because this one is live updated. This one isn't. But what can happen is that, these trades, it might be chopping around. Whenever it chops around, it chops around. But what it catches is these big trades, like it did right here, like it did right here, like it did right here, like it did here, 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 and here. As you can see, those big moves are caught every single time. And that's the beauty of the strategy. So this is a completely different strategy than a trend reversal strategy, for example, right? And you can see the graphs as well, which are live trading graphs from our performance. That's why it doesn't look that pretty, because it's literally just generated by our system. And then you can look at the trades and the performances of these trades, and the percentage. So here, October 16th, 136%, right? It has a hard stop loss at 20%, right? So you cannot have a larger loss than 20%. 50% here win, 130% win, 56% win, right? So these are the wins of that strategy. And occasionally, you get stopped out. 56%, 38%, and so on and so forth. 20%. So what this means is that it's a very consistent strategy, but it's very, very aggressive, as opposed to a strategy that's more consistent, much better, like ETH Turtle, but that one has smaller wins, but larger or better consistency. So that's how we look at the strategies themselves. So you look at the bundle, you play around with the allocations, you look at the leverage, and then you look at the specific strategies that are in that bundle, and you look at the leverage of those, see what works, and then as a combination, that's what you will trade. And you have your signals, you have your group, and in that group you will see when a strategy comes up, and when a strategy comes up, that's when you trade it with the correct allocation. If you want to auto trade it, once again, that's a different question. You can reach out to us, and then we'll help you out with it. But we cannot do it for you, right? Because you're not an investor in the hedge fund. So the way this can work is when you essentially get the program that can do it, we set it up on your server, and you can just run it the way you want to, and it will be auto trading it. But really what we're providing is the software that's able to auto trade, and we're also just sending out signals in an encrypted API, and you can use those, you can use any other signals, but basically you'll have an auto trading platform that you build yourself on the server, which we can help build as well. So yeah, that's basically it. I think the call's pretty long anyways. So we went over Porcupine, the stock strat, the overlays, the scalpers, the bundles, the strategies, the leverage, the simulation. So we went over a lot of stuff here. This might be a case that you could rewatch this multiple times, especially when you have some of these indicators and you want to trade them. In that case, definitely rewatch it, take some notes, and then ask us questions about how this works and what the best approaches are to trade this. If you guys have any other questions, let me know. Shark gives you automated trading. I think I answered that. Scalper as well. Porcupine alerts you'll have in the Discord. And yep, that is it right now. The call went pretty long anyways. If you guys have any questions, let me know. Other than that, this is recorded, so it's going to be in YouTube as always. And if you have any questions, play around with it. If you have any questions, I'm here. And yeah, other than that, I'll see you guys in the Discord.